The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 25th magnificent Monday edition of today's Money Masters show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic weekend, is off to a great start of their day. Let's make sure that you and I, that we do all that we can to have a magical Monday. Is it going to be Magical Monday? In the S&P 500, we're on 2,000 watch out here. So far, the inter-session high, 1999.83, 17 cents in order to get above that 2,000 level. It's trading at 1999.23. I say it's going to happen, and it's going to happen very soon out there. Now, for the next hour, I'll do everything I can to share with you extraordinary tools that help us to identify where price is likely headed to. Those are the A to B equals CD patterns, our lightning bolt pattern. They include the Fibonacci expansions and retracements. Of course, the combination of those two tools are the tools that help us to identify Gartley buy and sell patterns. Butterflies as well when markets are expanding, and they certainly are expanding. And then, of course, we always watch for those Japanese candlesticks because the bulls and the bears, they have to make signs for you and I each and every day. Speaking of making signs, why don't you give me a call? I see that sign out there. It says, give us a call. It's an interactive talk show that we've got here, 877-927-6648. Internationally, 727-445-1044. Together, you and I, we can go hunting for bulls and bears. But let's remember this. We are not creatures of circumstance, but instead we are creators of our own circumstances. It is Magical Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 104 points at 17,105. S&P very close to breaking that 2,000 mark. She's trading 1999.62, up 11 bucks. The Nasdaq up 26 points, trading at 45.64. Russell up 8 points, trading at 11.68. NYSE up 58 points out here. Let me check on market breadth here this morning. We checked in on the S&P 500. We looked at the 8 of the 9 sectors and the top 10 holdings in each, and basically everything was in the green. So good market breadth amongst the weighted movers inside the S&P 500. Good market breadth here. About a 3-to-1 advancers leading decliners out here inside the New York Stock Exchange. So another strong day out there. We'll see 2,000. We'll see if that 2,000 level holds throughout the trading session. Let's take a look at what's going on inside of the let's go take a look at the ETF structures. Let's go do that. Most folks have access to the ETF structures, so let's go do that. We can look at a little bit of everything. If we take a look at the ETF structures, let's start off by taking a look at the Qs out here. The QQQ. Right now, it's trading out at 99.57. Volume on Friday was 24 million shares. Volume the day before, 19 million shares. Volume the day before that, 23 million shares. Light volume. That's the only one of the real concerns out here with regard to the Qs here, as they are leading the market to the upside, but that needs to lead with conviction. The Qs make tops with light volume, and they make bottoms with high volume out here. Now, what the Qs are doing as we speaking right now, they are completing. Come on, Steve, we'll stop that. They are completing a 1.618 expansion of a set of swing points out there. That number would be 99.73. Inter-session high so far today, 99.61. Hey, let's go out to Park City, Utah, to Peter. Peter, thanks for calling. Thanks for holding. How you doing this morning?
Okay, thank you, Steve, for taking my call.
My pleasure.
I have the software for timing the trade.
Yeah.
And we get emails of new Gartley bullish and bearish patterns.
Yes.
Okay. However, what I do is I go onto my software and I go through a list of gold stocks or biotechnology stocks or whatever.
Yes.
And I click off the Gartley to see if there are any Gartley patterns. And one example, for example, is Barrick Gold, ABX.
Okay, let me...
And Barrick Gold generated a Gartley back in January or February of this year.
Okay.
And the brand new Gartley had it following price going up. Then it reached a high of 21, and then it went all the way down to 16, and now it's back up to 19, and then back down to 18. So
yes.
How do I deal with these Gartleys that are already on existing lists that generated a Gartley months ago? Does the Gartley still important, or would they have changed from a Gartley bullish to a Gartley bearish and then back to a bullish again?
So give me the one that you're saying that completed. Are you telling me the one that completed that you were first looking at? I was trying to pull up a fresh chart so I could follow along with you. So are you saying that you had a bullish Gartley that formed on May 28th, 2014? Or what? Tell me the first Gartley that you're looking at.
The first Gartley was Barrick Gold, ABX.
Right, but on what trade? Do you recall what trading?
It was in February.
In February. Okay.
So generated a bullish Gartley, it says, as of February. And, so now how effective is that bullish Gartley here in August?
Well, so it's a great question. By any chance, are you watching this on Tiger TV?
Yes.
Okay. Let me first do this here. Let me show you the Gartley that first pops up when I visually take a look at it. And then this might be able to also help answer your question. Now, what I'm doing here, Peter, is I'm starting with the swing point down on July 5th, 2013. That low was 1343. So that's going to be my X point. That's where everything is going to be based off of. And then what we're going to do is we're going to take a look at the high that was generated on August 27th. Now, the key to any Gartley pattern is that there needs to be an A to B equals CD pattern. In this case here, we're going to look at an A to B equals CD to the downside. So we're going to use the high of August 27th as our A point. We're going to use the low down here on October 14th as our B point. That's 1713. About an 84% retracement up to the top out here on October 28th. And then it makes a low. That low came in down on December the 4th. That created a 0.786 Gartley pattern. Now, Gartley only required an A to B equals CD, either up or down. He did not require the Fibonacci numbers. What Larry Pesavento did was identify these natural harmonic patterns, 0.618, 0.786, 0.382 to help us understand the trend of a market out there. And that just gives us a better reward to risk. Now, a Gartley pattern, Peter, once it forms, it has 5 possible outcomes. Those 5 possible outcomes are the following. It's either going to make a 0.382 retracement, and it's your job as a technician to try to identify which one is taking place. So you're going to make either a 0.382 retracement, a 0.618 retracement, a 0.786 retracement, what we refer to as a 100% move of a move, meaning getting all the way back to the original A point of the A to B equals CD pattern, or it's going to make an expansion. And that expansion could be a new A to B equals CD to the upside, where the Gartley began, in this case here, down here at the low of December 4th, became the actual C point of a new A to B equals CD. Now, once the Gartley has formed and it's confirmed, you can leave it on your chart and you can pay attention to it to see what price is doing. In the case of ABX, when it made its 0.382 retracement, which was on the trading session of December 26th out there, to me the move wasn't done there. There was no kind of reversal signal, candlestick, or anything along those lines. In fact, on the trading session of December 31st, you had a nice wide-ranging bar, and when we came back into the market, Barrick Gold went ahead and gapped up. That was telling us that it wanted to get to the next level, 0.618. And that's exactly what it did on January 21st. Again, no bearish reversal signal on any of the ensuing sessions out there. It just simply moved sideways for a couple days, went up to the third level, that 0.786 retracement area. Still, on that day, that really, January 24th is probably the day where you'd start to really tighten up your stop on those patterns, knowing that you had 3 of the 5 that took place. And the reason that I say that, Peter, is because that was the first bearish reversal signal on the way up that we really saw inside of Barrick Gold. That was referred to as a bearish engulfing candle and a key reversal session. Once price got above that, that doesn't mean you stop out. It means you maybe take a look at where you're going to go ahead and place your stop. And where you place your stop, if you're using Fibonacci numbers, you would say, well, probably the 0.382 retracement of that entire move, which would have been about $18.16, somewhere tucked just below that. You don't want to use a real logical number that everybody else would use out there. What Barrick Gold actually did was it went up and it made that 100% move of a move. It made it all the way up to the highs. And what we take a look at, that's an important swing point. And on August 27th, there was 21 million shares out there. And when Barrick Gold was testing it was testing it with 15 million shares and 12 million shares. When you test a swing point on light volume after making a 100% move of a move, it tells you, Peter, that you're likely going to do something different. Now, that different could be moving sideways, which is exactly what it did. But I would say that this Gartley pattern that we're taking a look at back here that formed back in December, that its work is done. Now what we take a look at is, are there any other Gartley patterns that have formed out here inside of Barrick Gold? And the answer to that question is, I don't see anything current. Now, the software in the art of timing the trade, what that's doing is that's picking out potential patterns as they are occurring. But what we have to do as technicians is go back and take a look at those levels to see if they, in fact, have formed or are forming, or you've gotten the right, reversal signal. And so back here in July, we can see that coming off of that original high back here in February 25th, down to the low, as you pointed out, that was put in on May 28th, it made a 0.618 retracement. But missing from that is an A to B equals CD pattern. Now, I don't know that the art of timing the trade picked that up as a potential Gartley, because that Gartley pattern really couldn't form into the 2017 to 2041 type price range out there. But let me ask you some questions. As I went through that explanation at this stage, what additional questions, what have I confused you on, or what did I not answer for you? And let me circle back around and try to answer that for you.
I think you answered it fully, and I thank you very much for the full explanation. And basically, the way I understand it is the best way to use the Gartley pattern is a brand new Gartley forming as a bullish pattern to buy, and then not worry about the fact that it could be over months later, even though the software shows that it is a bullish Gartley. It could have taken place months ago, and that may have changed by now.
Well, what I would do on the daily basis, it's telling you what is currently out there and what may be forming. And what it is, Peter, it is a scanner system, which is a beautiful thing, because you're scanning 3,000, 4,000, I'm not sure how many stocks, maybe up to 5,000 stocks that David White is scanning for you with that system out there. And it's giving you symbols of something to go take a look at. As an example, do you want to give? Actually, I can probably look it up. If you want to hold on through the break, and then after we're done with you, I can go take a look at anything that might have popped up this morning or Friday, and you and I can go look at it to see if it's something that you would want to consider as a trade. You want to do that?
Well, yeah, the BIS is a new one.
BIS. Okay. So we get back from this breakout here. We're going to go back out to Peter in Park City. We're going to take a look at BIS as a possible Gartley pattern. That came from the art of timing the trade out there. And we'll do an evaluation as to what the trade setup might be. And then after that, we're going to go take a look at the Euro with Lou from Nashua, New Hampshire. This is TFNN, and we did get the S&P up to the 2,000 level out there. So 2,000 watch is now over with. Steve Rhodes, TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 94. S&P is up 11 points, trading at 1999. It did get up to 2000.24. We're going to go back out to Park City. We're speaking with Peter, and we're taking a look at the ETF for the biotechs out there, BIS. Now, Peter, when that showed up on your screen as a potential Gartley pattern, in this case here, it was a butterfly pattern. Did it show up in the past day or so? Is that when it showed up on your screen? Okay.
Yes.
All right. Now, the specific question that you would have about this would be what? Do I just take the trade carte blanche, or tell me what you're looking at?
When you go through the order of the trade and you're going through a list of, let's say, biotech stocks, right, and you see a Gartley pattern that had already formed a few months ago, or you see a Gartley pattern that has just formed a couple of days ago, are your odds better to just follow the trade of the new Gartley rather than one that was formed 3 or 4 months ago?
Here's how I would do it. If I would first focus on what the current pattern is. So you want to stay present with regard to what's currently going on. If by any chance you can have a situation where you've got a Gartley within a Gartley pattern, So a small one like this, this could have, this is not an example. If I find one though, I'll put it up on the screen. But to answer your question, if you've got the larger one that's out there, you want to be paying attention. But I would stay with the current pattern out here. Now, in the case of BIS specifically, because the underlying instrument is a basket of biotech stocks out there, you really, before you would just take the trade on this, you really need to see what's going on, at least within the top 10 holdings of that specific index. But this right now is setting up a potential butterfly pattern. And that's an expansion of the swing points from July 3rd's low to the high out here on July 17th. It's making A to B equals CD to the downside, but it went through the 1-to-1 level. This says to me that the BIS probably targets 1159, 1134, 1212. Perhaps it's trading at 1233. But what you'd want to really do is you want to time this one with the market. If you were looking to take a long position in BIS, you want to make sure that the NASDAQ itself is now starting to correct as well out there. And that's how I would specifically trade this one.
Terrific.
Okay?
Great. Thanks so much, Steve. Appreciate it.
My pleasure. Thanks so much for calling. It was Peter in Park City. Let's go out to Nashua, New Hampshire, to Lou. Lou, thanks for calling. Thanks for holding. How are you doing this morning?
Okay, fine.
Excellent.
I've got... I'm short the euro.
Okay.
And I'm just wondering, do we have more downside?
Well, let's go check in on the currency pair itself and see what we can find out here. Let's go see what kind of pattern it has in place. I just got to find my. Give me a moment here to pull it up. There we go. Euro US dollar. Okay, so, and let me put up the daily chart out here. And first question, we take a look at the euro. It has now completed a 1-to-1 A to B equals CD to the downside out here. So that price projection was 132.100 even, and you're trading at 132.027. So the question is, does it have downside? Do you have a stop in place?
No, I don't.
Okay. If it were me trading it, and if you've been in this trade for a while and you want to see if this will continue to run, because for all intents and purposes, it should continue to run further lower, which would probably take you into the 1.3075 level. But my concern here, Lou, is this thing, it continues to be in the extreme oversold condition out there. So, you got a lot of people on that side of the trade. I would at least have a stop above Friday's high. 1.32955 is the high out there. And that may be too much room to give it. I don't know, where you got in on the trade. Right now, I have not seen any kind of reversal signal inside of the euro on the daily chart as we speak. But with these currency pairs, you really should have a stop in place. Is it the euro US dollar, or is it the actual future contract that you would be trading out there?
Future contract.
Future contract. If we take a look at the future contract coming down from the top out here too. Oops, didn't mean to do that right there. If I just give you a current Chapman wave count on the way down, just see where that might be at for you. It would seem to intuate to us that it might have another move to the downside out here over the course of the next couple of days. But I would be, just make sure that you've got a stop in place. It looks to me like it still can absolutely move lower out here, subject to any reversal signal out here. All right?
Great. Thanks, Steve.
Hey, you bet. That was Lou in Nashua, New Hampshire. When we get back, we're going to go out to Concord, Massachusetts. We're going to speak with Mark, our good friend Mark. We haven't spoken to him for quite a while. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument.
By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And Lou, if you're still listening, what I want to do is give you an additional piece of information that I took a look at here, and I've got the 120-minute time frame chart up for the futures contract for the euro. And one of the patterns here that I notice out here for you to help manage the trade is really ever since the August the 14th. Is what I'm going to call it. So ever since August the 14th, the horizontal lines going across my screen are the TAS professional market profiles out here. And the resistance levels, we've not seen a close above that. So I wanted to give you the new market profile that is out here. And I would say that if you see a close above this level, it's probably a pretty decent indication to go ahead and, really tighten up your stop or go ahead and take your profits. That's a close above the number 1.3216 on your trade out there. Now, the other area you can look for is the actual Friday test of Friday session. There was a gap down over the weekend out here, and that's the other area. But I would say that as long as 1.3216, you don't see a close above that, there's more downside potential, and that is inside the Euro futures contract. Now, let's go out to Concord, Massachusetts, to Mark. Mark, thanks for calling. Thanks for holding. How you doing today?
I'm fine, Steve. How are you? Good.
Nice to hear from you. Have you had a nice summer?
I've had a wonderful summer. How about you?
It has been very good.
Florida is summer all year round, so.
It is. So, yeah. But now, did things cooled off a bit up there, or?
Well, I think we're going to have a hot, early fall, and I think we could have a very hot winter. I don't know. There'll be two in a row. Florida is starting to look pretty attractive to me, or maybe even Mexico. I don't know.
That's too much. Well,
I had a couple of questions for you.
Yeah, absolutely.
First of all, you were on filling in for Tom on Tom O'Brien's show a couple of days ago.
Okay.
And you had made a reference to the S&P following a channel. And
yes.
I was wondering, do you still think that? B, what if you do, what is the top of the channel? When it gets to the top of the channel, what is it going to do?
Okay, so if we take a look at it, if I take a look at the S&P, what I'm going to do here, I'm looking for a chart. I'm going to go to the continuous contract for the daily. Now, if I take a look at the, Mark, are you watching this on Tiger TV?
Most certainly am.
Okay. Now, what I've got up on my screen here for you is the weekly price channel going back to March of 2009. So
okay.
This is the price channel that we have been in. And it's actually the yellow lines going across my screen. I know there's some other red and cyan and green and purple, magenta, fuchsia lines out here. But the dark, thick yellow lines are the actual rising price channel on a month coming all the way back to March of 2009. And price is above that area. Now, one of my subscribers turned me on to this, and I've been tinkering with it over the weekend. And it's taking a look at when price travels above any kind of rising price channel. Does it continue to move with inside ranges there? And so I've been toying with that. So the answer is there was a smaller price channel I'd mentioned on the Tom O'Brien show, but if I take a look at the even larger one where it's broken, it hasn't really broken, it's broken above, it's not really a breakout, right? But what this says to me is that price wants to likely move up to the green dash line on my screen, which is right around the 2020-ish, 29, 30, somewhere right around there. And that's taking a look at a weekly chart. If I come down here to a intraday time period, let me see if I've got that. So on an intraday time period, meaning I'm going to take a look at a 5-hour chart out here, it looks like the target is probably right around 2008, 2010, 2009, somewhere right around there before it runs into maybe its next resistant area. And that's what it looks like as we speak right now. If we take a look at expansions of swing points, and I'll go back over here to a different spot, and I just take a look at the daily expansion. The daily expansion says that we ought to see price get up to 2012. So that's a 1.272 expansion of our swing point from the trading session of July 24th high down to the low on August 8th. So I think that target of 2012 on the daily chart, and I go back to that 300-minute chart, and utilizing the expansion of price channels out there, that seems to be like a pretty decent target area. And maybe we see a price move up there before we see some kind of retracement. It's been some heck of a move off of that low on August 8th on that key reversal session. And at this stage here, I don't see any sign of it coming to an end on almost any time frame chart that I look at. So
you think that, let me have you gaze into your crystal ball for the next year or two or three.
Yeah.
If you called the Psychic Stock Hotline and you were looking at your chart and you envision this going out further, would you basically say that we were in this upward momentum trading range that would come down to the bottom of the channel, go long, top of the channel, we go short, and we keep making this forever pattern?
No, at this stage here, if I were looking at my crystal ball, what I would tell you is that the S&P wants to make a move to 2350. And we're right now at 2,000. And the reason why I say 2350 is because the longer-term pattern was that 16-year, 800-point consolidation. And no matter what chart you look at, when you see a consolidation pattern and you break out above it or below it, you're usually going to do a measured move equal to the consolidation. And that gives us a price projection on the longer term at 2350. And it's very strong. There was a real chance last month, the month of July. Of course, it was just one day, Mark. It was July 31st, was enough of a down move to mess with the, from a technical standpoint, to do technical damage to the weekly, the monthly charts out there, whether it was the Dow, the S&P, the New York Stock Exchange. But the S&P, it just simply has ignored that. If we finish out right here, there's nothing bearish about the monthly chart for the S&P 500. And if we finish out right here, the NASDAQ specifically, the NASDAQ composite, is going to close again inside of its all-time swing point high, the low of it, March 31st, 2000. That low, Mark, was 43.55.69. Shoot, we're 200 points above that. We're 210, 15 points. We're at 45.68.
Let me get to the point of why I asked the question.
Yeah.
I have followed Tom since, she was just up here in Boston, as you know. And Tom has been probably pretty much a bear in the market for quite a while. And I'm just, it just seems like you seem to be very positive in the market, and Tom overall has a very negative tone on the market. And as a trader, as one who listens to both of you, I just get confused. So that's the logic of my questions.
Sure. So the first, it's always time frame horizons. So, because I see where Tom goes long and short, so it really depends on time frame horizons out there. And the other thing is that, to me, one of the coolest things is that Tom's provided us, each of us here, with the opportunity to provide our input as to what we believe we see in the markets and what they're going to do, regardless of what somebody else might be taking a look at.
What would be helpful for me as a trader, okay? Yeah. In this time frame, you and Tom used to do the show together. And yes. I know that Tom went off and did want to do his real estate thing in this time slot. Yes. And now he's only here on when he does the Bull and Bear Hour, and you don't participate in that show as a rule. What would be helpful for me as a trader is to have both of you back together again.
Yeah.
And for you to both say in very, for lack of any other expression, non-technical language, what you guys think the market is going to do. And so you can play off each other. Tom says, oh, no, well, the S&P is going to go to $50, and you're going to say, oh, no, it's the S&P is going to go to 2,900, So, and you guys can both hear, so us listeners can hear both at the same time. I think what you had in this time slot before was a wonderful show, and I know that I'm not the only one who thinks this.
Yes.
I miss that. Yes. And, I would like to have both of you back, and ideally, I would like to see both of you not in this time slot, but also at 4 o'clock. Now, I know that you're probably sitting in the boat dock at 4:01 after the market closes with a fishing rod and we're waiting for the boat to go out.
Yes,
but,
yes.
It would be wonderful for me to have both of you, particularly in the once the market closes, give you 3 cents worth for the market.
Well, I appreciate those comments, certainly, and I always enjoy when I get to do a show with Tom. In fact, I think we did this past Friday. I know we did this past Friday together, and it's always a great time to do that. The thing about the markets is that what makes the market is that you're going to have two people look at a market and have two different opinions out there. That's why we've got bulls and bears or buyers and sellers. So thank goodness for that.
Right. And to have the opportunity to hear both of you together, I think that's what is missing on TFNN.
Yeah. Now, what I do try to do is I try to identify, both the bullish and the bearish case as often as I can. What's that? Yeah.
And so does Tom most of the time. But to hear both of you play against each other, I think was a wonderful opportunity.
You just want to see a boxing match. I don't want to box against Tom. He'll kick my butt.
Well, if he kicks your butt, then you're gonna have the 9 o'clock time slot open, and then what's Tom gonna do?
Oh, there you go.
He's gonna have to get out of bed early and fill that time slot.
Yeah. Now, Mark, one of the things that I was keying in on when you were asking the question was you were asking me to look into my crystal ball, and you were asking me to look off into the future. And that was the reason I went towards the monthly charts for you, to give you maybe the larger viewpoint as to what's going on. And so when we take a look at trading inside a swing point, when you close inside there, your chances increase that you're going to go test the top of it. And so that's what the composite is telling us. And there's nothing bearish about the composite, period. The New York Stock Exchange, it's getting rid of the entire bearishness that it had. Now, it hasn't completely done it, but if it were, and when it does close above 11,105.85 out there, from a monthly standpoint, it's got a 6,000-point move consolidation. It says that at some point in time in that crystal ball, we're going to see 16,000 in the New York Stock Exchange out there. Now, that is a completely opposite and opposing viewpoint of several others, here at TFNN. What I like to do is just take a look at the charts here, take a fresh look and say, hey, what are the charts providing us as far as information right now? When they turn, when and if they do turn, I'm absolutely willing to, in that moment, if something changed here at 10:47, or 10:46, I'm happy to come back here and say, hey, guess what, folks? We now have new information. But the New York Stock, yeah? But
do you think short-term right now, you think we're going to go to this 2008 area to 2012 maybe?
Yeah, that's the way. That is absolutely the way that it looks as we speak. Right now. Today, look, from a celestial standpoint, I'll tell you today's a new moon. Today could be a high. The last new moon actually marked a high, so we got the market moving up into a new moon. How long would that high be in? I would say it could easily be in for a few days, 3 days or so. There's a celestial aspect that Larry's going to go ahead and cover, so that we both don't cover it on the trading day, and he's the one that really turned me onto it through his books out there. So in a quick conversation this morning, he was going to go ahead and cover it. But I can tell you, if you listen to Larry's show, he'll tell you about the significant aspects, the 0.618 planets that are coming together today, and those can mark a high out there. Whether it does or it doesn't, I don't know. I can tell you the last 2 or 4 times that it did. So I'm aware of things that are out there in the marketplace that are signals that we have to, be careful of and just watch and observe. But that's no different than driving down a road and paying attention to the stoplights and the yield signs and things of that sort. So, I'm just driving the car down the road right now, and right now I don't see anything that says, as we speak right now, that the market wants to move lower before it moves higher.
Yeah. All right, my friend. Thank you. Hey, did you ever read the book I emailed you?
I read a good portion of it, and then I ended up putting it down, not because I lost interest, just because I had so many other things going on. But I do want to pick up. You're a great writer, by the way.
Oh, thank you.
I wish I would. I enjoy writing too, but I only wish I had your skills and your talent.
Well, thank you for the compliment. When you get done with that one, I got another one I'm going to email.
Oh, I love it. Hey, and I got another one of our Tigers has written a book as well. I got an email from him over the weekend. So we got a lot of authors in the audience out here. So is
that a Tiger novel, or is he writing something else?
I haven't. I just got the email, and I haven't had a chance to read through the entire thing because I was kind of tied up and busy yesterday. But it's a book that he's been working on for a long time out here. So I know he told me I can't tell anybody about it, and I won't. But it's great to be in the company of such accomplished individuals like yourself.
Okay, Steve, thank you much. Talk to you
soon. You bet. Have a great day. That was Mark in Concord, Massachusetts out there. And one of these days, this book is going to be a bestseller out there. He's the new Tom Clancy. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow's up 115, S&P is up 13, Composite up 32, New York Stock Exchange up 70 bucks out there, up 0.6%. Let's go check in on the summation index out here. I've got it for the Dow and the New York Stock Exchange and the Composite, so I've got them all out here. As we take a look at the Dow specifically, it's only 30 stocks. Let me just kind of expand this up a bit. Maybe if I can grab it. Can I grab it? Come on, grab it. I know I can. There we go. That didn't work either. Son of a gun. There we go. Okay, so there's the summation index here for the actual Dow. And in the case of the Dow, what it's really going to do, again, next piece of information comes from that trading session again from July 17th. The high out there is 17,151. That's going to be tagged. You're at 17,114 right now. It's traded up as high as 17,116. And what I would expect to see out here is, is at least a test of that area. And then maybe we start to see it move sideways or something. I mean, when you take a look at this, we've got, 9 sessions out of the last 11, I believe, that have been to the upside. So that's a bit of an extreme situation. So expecting some type of retracement here soon. Mark, just to kind of go back to your question, some type of retracement soon, is likely in the cards out here. New York Stock Exchange, if we take a look at the NYSE, this thing moved into a nice bullish mode back here on August the 12th. The summation index ticked up at that stage, and its price oscillators here are in the level of where you see initiation moves to the upside. Where you eventually see higher price. That doesn't mean that you can't get a retracement, but they are up at the levels where you see higher price. It's a swing point high, takes you back to July 3rd. The low of that swing is 11,069, the top of which is 11,105. But it is New York Stock Exchange in full out bullish mode, just as the NASDAQ composite is as well out here. And the NASDAQ composite, it's got a breakout move that says it should target 4650. It's trading at 45.70. So 46.50, what does that make it? Another 80 points to the upside. And it could be that we see 80 points to the upside before we see any move sideways out here. So I see our man Basil Chapman is in the on-deck circle. Speaking of on-deck circles, any of you get a chance to take in the Little League World Series out there, congratulations to all the teams that played, but specifically the team from Las Vegas and from Chicago. Chicago advancing and being able to play in the Little League World Series game. The thing that I've always found is a little bit unfortunate, but it is what it is, and it's about being able to manage their pitchers. The team from South Korea, first, congratulations to them. What a strong team. But both teams, what great games out there as far as teams coming back, overcoming hurdles, being able to overcome, what looks like victory being snatched from you. And that was the game specifically between Chicago and Las Vegas out there. That was just really a great game, as was yesterday game when the team from Illinois in the last inning did everything they could to try to get back to a tie ball game out there. And they did not give up. So you got to love the spirit out there. What I was saying, the thing that's unfortunate is because of the pitchers that and their arms out there, that you go from actually the game on Saturday, you have to go to the very next day. You don't get enough rest in between games in order to go back to your full rotation out there. And so the team from Chicago was a little bit disadvantaged because the powerhouse that South Korea was. They had all of their good pitchers in that could pitch. So. And so do we here at TFNN. So we don't have a rotation problem. And I'm going to rotate over to Basil Chapman. And after Basil, we got Larry Pesavento. And then we've got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5 today. So thanks so much for joining me, folks. Have a great Monday. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.